Who nets more in income? Working Bob and Jane or retired Bob and Jane? We're going to go into this a little bit using Right Capital with a couple different scenarios I think you'll like. So let's dive into this, shall we? Actually, let me real quick. One of my pet peeves, frankly, is that people say, "Oh my goodness, I need $1 million to retire. I need this to retire," and without having any thought at all of what they actually do need for expenditures, and now having any thought at all of how that need is met via Social Security and other sources of income. And it's a huge pet peeve of mine. And then a lot of financial advisors will say, you're in an effective 25% tax bracket. All this stuff is nuts. I think my first video I ever did, and probably one of my first, where I took on this local guy, Wes Moss. I got no qualm with Wes Moss, but he did a thing where, actually, I don't follow his YouTube that much. I don't think he does that many videos. I actually liked his basis of his proposal, his video in this case, in an article. It said, you need about 83,000 income in order to be happy. And there's some studies on that, and I get that. And I actually like where he was going with that. He was using faulty numbers, which I think led a lot to be desired, frankly. And one of my first videos I ever did was taking apart that. I actually, again, this is not a bash on this guy. I like his video. I thought it was good. It just, he missed it, sadly. So anyway, let's go into this because I think you need to know this. All right, so we got Bob and Jane sample. Bob and Jane sample. They got no ink. They got no money. No ink. They have income, we'll talk about it, but they got no net worth. So we have no assets at all. Nothing. Big fat goose egg for assets. We're just comparing income. What do they net? More working Bob or retired Bob and Jane? All right, so what we're going to do is we're going to go to profile, and we're going to say how old they are. So they're both 64 right now, all right? So they're both 64. Their income is, they got self-employment income right here. And we'll say Bob is a plumber and Jane keeps the books. And between them, they got $80,000 a year self-employment income. And this will make sense here in just a second. Let's just not even adjust that for inflation. So we got $80,000 a year in self-employment income. They're going to keep getting this until they retire at Bob's retirement date. All right. And when does Bob retire? Well, we're going to go to goals. And remember, they're 64 now, so Bob is going to retire. They're going to retire at 67. So it'll be January 1st of 2000. I think it's January 1st, 2023. I think I can't remember. We'll go dive into that. All right, that's it. That's all they got. Now, what they're doing is they're saving. So they're saving 10% into Bob's 401k, and we're just using Bob for example. So before you say this is misogynist, you can make Jane. It doesn't matter. You're just using Bob. So they're saving 10% a year into his 401k. All right, hope that makes sense. So, and we go to Social Security. We're saying their Social Security, they're going to take it at full retirement age, and we're using a simple estimate, which is based on their current income, essentially. And we're going to say Jane also has Social Security at her full retirement age using a simple estimate as well. All right. So again, and they're working until Bob retires, which is going to be at 67 years old, which I think is January 1st of 2023. But we'll go into cash flows. All right. So let's go to retirement. Again, this is self-employed. We'll do one where they're just making a straight salary as well. All right. We're going to go to cash flows, retirement cash flows. Did I click on it? And we're going to see what their income is. All right, so here, they're working. That's right. So the first full year of Social Security is 2023. So we'll use this. So there's their income flows, $80,000 from self-employment income. Their total tax payment is $17,243. And how do we get that? Well, we're going to see they got federal taxes, all right? And we're going to see adjustments to income. They got other taxes, self-employment tax. We'll go into this here in just a second. Total tax is $14,000. So we take our Trusty Calculator, $14,000 on $80,000. That's a 17.5% effective tax rate. All right. So let's go. So again, they got $80,000 income. They pay $17,000 in taxes. They have $8,000 of savings, 10% going as 401k, and so they net $54,000 when all is said and done. Hope that makes sense. All right. So again, we're going to go to 1040 to show you exactly what I'm talking about. So 1040, we're going to go to details. Let's just go to 2021 to get a full calendar year. They got no wages, salaries, or tips. So this is all self-employment income right here. All right, so $80,000 of self-employment income. We get, they got some qualified business income deductions. So their total taxable income is $29,000. All right, so they're only paying essentially a 12% marginal tax rate there on the 29,000, but they have self-employment taxes right here. This is going to be Schedule 4. So self-employment tax is 11,304. We go to what Schedule 4 is right here, and we will show you. There you go. There's their self-employment tax. That's their Medicare and their Social Security, 7.65% on both sides. So it's 15 and a quarter, or 15.3, which is what I got paid. So they're paying 11,304 on $80,000 of income. 11 divided by $80,000. That's about 14%. That's in terms of an effective Social Security tax, so about 14%. It's actually 15.3, but we're just using rounding numbers here. Anyway, so you can see what that is. So if we go back to 1040 again, go back to 1040, you can see, let's go to 2021. $80,000 of income, $64,000 of total $64,000 of adjusted gross income because of some business deductions. How did they get business deductions? I don't want to get too deep in this because I just wanted to show you something. But if we go to cash flows and we go to tax, we can see federal. And you can see they got total income, adjustments to income, adjusted gross income, deduction, QBI, taxable income. All right. So from an income tax perspective, it doesn't look that bad, but from a total tax perspective, it is, because they got to pay both sides of self-employment tax. So before you say, "Oh, those business owners get tax breaks," no, they don't. Trust me, they don't. Ugh. All right. So now again, so what they're netting, when all said and done, they're netting $54,000 of income. All right. Now, the following year, when they have a full retirement, they're netting $47,600 of income. So their income is only reduced by $7,000. Not a huge amount of income being reduced by $7,000. But as opposed to working, however long they're working, how many hours, now they get all that time to do other things. Maybe it's to write a blog, write a book, do videos, I don't know, garden, anything they want to do. So they're not really losing that much from their when they're employed versus when they're retired. Now, how do they get this income when they're retired? Well, we're taking Social Security to the full retirement age, and you can see here here's Bob's Social Security, and there's Jane's spousal benefit. So you can see they're making about $48,000 a year in Social Security. That's the only income they got. Notice something else, by the way. Oops. Yeah, no taxes whatsoever. Why? Because their only income is Social Security. I cannot stress this enough how valuable Social Security is when done right. So let's go to 2023, and you can see their total Social Security benefits, $47,000. Total taxes on Social Security benefits, taxable $0. Now, how that's reflected in the tax code, by the way, I tell you, man, I think if you look at let's see if I have it here. I had written it down on the IRS about. I don't think I got it here. Yeah, one of my notebooks I have. Hold on just a second, because this is pretty interesting in my opinion. Yeah, here we go. I think. Hold on just one second. Let me find it. It's pretty interesting. I guess I won't be able to find it. Yeah, right here. All right, so we have in 2016, we have total AGI in America of $280 billion, which is fine. That's AGI, adjusted gross income. So if we go back to the tax code, this is AGI right there, line 6. You know what's not shown on this is their Social Security benefit. So when people say the average retiree is only making this without the other, are they using this number right here, or are they using AGI? Because you can see the total AGI in 2016 was $280 billion. But if you're just looking at AGI to give you an idea of your total income retirees had, you're missing this right here, because again, a good amount of Social Security, at least 15%, is not taxed. And if you go down to Social Security taxable benefits for a tax group between 50,000 and 100,000, income bracket between 50 and 100,000, they had 56.83 billion of taxable benefits. All right, but they had more than that of actual income, because again, taxable Social Security right here, taxable amount $0, and total benefits are completely two different things for sure. Now, the taxable Social Security benefits in 2016 was 56.83 billion. So we're just going to say 56.83 divided by 500 5.432 million. So 5683. I guess I want to do. I don't know how to do that. 56 billion, 5683 divided by what, 5, I guess. So it's basically the income earners between 50 and 100,000. Their average taxable Social Security benefit was 1.136. So basically $11,000. That's your average taxable Social Security benefit. But that's not true in terms of your actual money you have to spend. Just want to point that out. I think a lot of people way overlook that for sure. So let's keep going. So that's Bob and Jane while they're self-employed. What if they're just earning a salary? We're going to go to profile. We're going to go to income. And we'll just zero this out here. Blink. So they got no self-employed. We're just going to say 80,000 a year of income for old Bob. All right. And again, we're going to have him retire when he's 67. Everything else is the same. Let's see, make sure we got goals. That looks good. Yep. All right, good. Oh, savings. Let's go to savings here. They're going to put 10% into Bob's. Let's get rid of this. Not self-employed. Boink. Into Bob. Yeah, there you go. All right. Just to show you. So now Bob's making $80,000 a year. Jane isn't making anything. What does it look like for them now? He's just a W-2 employee. So he's not paying both sides of FICA. So we go to cash flows. All right, so now Bob is, we're going to look at this for, it doesn't matter. So we're going to look at 2021. They get 80,000 coming in. They got 14,000 of taxes. Let's go to taxes here. You got federal, state, and FICA. So 80,000 coming in, 14,000 of taxes, 8,000 of planned savings. So they're only netting $57,550. In their first full year of Social Security, they're bringing 47,000. So again, 10,000 less than what they're making before, but they have all this extra time on their hands. So not a significant difference, in my opinion, not at all. And again, we just look at the income flows. That's what they're making, and here's their Social Security benefit right here. Bob gets $31,834. Jane gets half of that because they're both taking that at the full retirement age. All right, so what if we make their income $60,000 instead of $80,000? All right, blink. We're going to click on that guy, and we're going to go to retirement. And we're going to show you what it looks like. We're going to go to cash flows, and it's going to be pretty much the same thing. So here they're netting $45,000 a year at 66. They're netting $41,000 a year at 68. So if they're making $60,000 a year, which is roughly the median income in America, by the way, median household income, not a big difference. So they're making $60,000 a year gross, but they're only netting $45,000. And when they retire on Social Security, they're making $41,000 gross and netting $41,000. So I hope that helps. I think a lot of people miss how A, valuable Social Security, and B, how much taxes they actually pay. I think they're ignorant about the total tax hit, and it's bad, man. And once you retire, not only are you paying a whole heck of a lot less taxes, you also don't have to commute. You don't have to deal with a crappy old boss. And you have more time on your hands to do what you want to do, which might be to make some extra money. Let me know if you have questions. We'll see you.